The Nightly Business Report.
Good evening. Tonight, Sri Lanka bonds fall as restructuring talks need more time. Progress in debt talks is key to securing more IMF funding, while macro-linked bonds remain a key sticking point. The IMF spring meeting asked the visiting Sri Lankan finance minister whether the country can safeguard its growth in an election year. Sri Lanka stocks are back in the negative territory as bondholder discussion seems to fail at present. And Ghana's debt restructuring deal falters after IMF rebuff. The fund says deal reached with holders of $13 billion of foreign bonds does not reduce the debt load sufficiently.
From Studio 24, here's Sina Mayadune.
Good evening and thank you for joining us. Sri Lanka has agreed to a state contingent factor in restructuring its defaulted sovereign bonds. The Finance Ministry said in a statement that the government has also indicated the willingness to consider a governance-linked bond after the first round of talks.
A committee representing bondholders had sent a revised proposal for a GDP-linked bond, also known as macro-linked bonds or MLB, in March with lower coupons. During the meetings, it was agreed that the primary basis for the discussions would be the group's March proposal. Sri Lanka had made a proposal with combined plain vanilla known as A bonds and a state contingent adjustment factor known as B bonds, which the bondholders rejected. The bondholders made a fresh proposal this month, taking into account Sri Lanka's suggestion for a downside scenario below IMF's growth projections, as well as an upside. Sri Lanka had not agreed to the triggers suggested in this month's proposal or the baseline and the payments to be made under baseline and upside scenarios. While the IMF deemed the bondholders' March proposal unsuitable for its debt sustainability requirements, no assessment has been made on the April proposal. Bondholders had also offered to propose a governance-linked bond as Environmental, Social and Governance or ESG. On the invitation of Sri Lanka, the bondholders had proposed an ESG bond which is linked to meeting IMF tax revenue targets and corruption disclosures. Coupons of the ESG bonds would fall if IMF targets are met.
So how would these restructuring efforts of ISB and other capital bonds impact Sri Lanka's capital market? We pose that question to senior researcher Tarusha Ashokar from First Capital Holdings.
Today saw a significant drop of 214 points, bringing it below the 12,000 mark, largely due to delays in finalizing debt restructuring talks. In late March, Sri Lanka engaged in discussions with a group of its private bondholders regarding the restructuring of international sovereign bonds. So these talks lasted for 3 weeks and focused on 4 key aspects of macro-linked bonds, notably baseline parameters, risk balance, trigger test for adjustments, and share of additional value. So progress was made on baseline parameters and risk balance, but no agreement was reached on trigger test and cash flows. The inability to reach an agreement adds pressure on the country, which needs to make progress on debt restructuring to ensure continued financial support from the IMF. However, officials have confirmed that Sri Lanka aims to achieve common ground in the next few weeks before the second review of the IMF program by the executive board. So we anticipate that this situation may impact investor sentiment, but we do not foresee any immediate impact on the fundamentals of listed companies.
After meeting with World Bank and IMF officials in Washington, D.C., State Minister of Finance Shehan Semasinha says that the International Monetary Fund has urged Sri Lanka to preserve the hard-earned gains after an unprecedented economic crisis under the Global Lenders Program. The Sri Lankan delegation, led by Shehan Semasinha, met Kenji Okamura, the Deputy Managing Director of the IMF, on the first day of the IMF and World Bank spring meeting.
Mr. Okamura commended the Sri Lankan authorities on strong program implementation and excellent reform progress. He emphasized the need to preserve the hard-earned gains Sri Lanka has experienced since the beginning of the IMF program and continue strong ownership. The State Minister said on X that the Sri Lankan delegation, including Central Bank Governor Nandalal Veerasinghe and the Secretary to the Treasury Mahinda Siriwardena, explained the recent socio-economic developments to Okamura.
The Indian High Commission in Sri Lanka says that India has relaxed an export ban, allowing 10,000 metric tons of onions to be shipped to Sri Lanka. The exemption for Sri Lanka reiterated India's neighbourhood first policy, adding to the Sinhala and Tamil New Year festivities here. Onion prices went up in Sri Lanka after India and Pakistan banned exports. The Directorate General of Foreign Trade has issued a notice allowing National Cooperative Exports Limited to ship 10,000 metric tons of onions. The UAE has also been allowed to import 10,000 metric tons of onions on top of the 24,400 metric tons already permitted. A short break now, the market performance and the latest data from the stock market on the other side. This is the Nightly Business Report. Welcome back. Now to the stock market. The Colombo Stock Exchange ended in negative territory after the news of the failure to reach a bond agreement shook the market. The broader all-share index closed down 1.78% at 11,792, while the S&P SL20 index closed down 2.66% or 94.92 points at 3,470. Turnover was at 1.4 billion. Let's get an in-depth analysis of the stock market's performance, and for that, let's go to Zaima Jihad from the First Capital Holdings.
The market experienced a significant downtrend today with a hefty intraday loss of 214 points. So with this, the ASPI closed at 11,792, while profit booking was seen to escalate on Commercial Bank, Sampath Bank and HNB. Similarly, an S&P SL20 index also declined sharply, falling by 93 points. In terms of the index movement, it was on a persistent downward trajectory with selling pressure mostly witnessed on banking sector counters because of the uncertainty surrounding the debt restructuring talks and the inability to reach an agreement with the bondholders. So this stirred a situation of panic selling mostly among retail investors, leading to the significant decline in ASPI. With this negative sentiment in the market, turnover declined to a near 1 month low, recording at LKR 1.5 billion, and 50% of the overall turnover was led by the joint contribution from banking, diversified financials, food, beverage and tobacco sectors. Despite the dip in turnover, number of trades remained 22% higher compared to the monthly average number of trades, indicating a rise in selling pressure from the retail investors.
Gold prices are treading near their record peak, marked at $2,400 last week, as escalating tensions in the Middle East and strong U.S. economic data influence market dynamics. With the ongoing geopolitical conflicts, notably between Iran and Israel, gold has risen modestly to $2,385, underscoring its role as a safe haven asset during times of global uncertainty. The US dollar's strength continues to be a significant counterweight to gold's rise, fueled by robust economic indicators. Let's get you the latest on oil prices. Brent crude oil prices remained near a 6-month high this week, hovering around $90 per barrel amidst fears of an oil price spike driven by escalating geopolitical tensions in the Middle East. Most countries in the region have seen their current account positions improve over the past year, shifting from deficits to surpluses. However, Turkey and Romania continue to face large current account deficits, and the rising cost of energy imports may hinder efforts to reduce these gaps. On the inflation front, a recent analysis suggested that higher oil prices are likely to exacerbate inflation across Central and Eastern Europe. The Sri Lankan rupee has depreciated against the US dollar at some commercial banks in the country today compared to yesterday, while it continues to remain below the 300 rupee rate. Here's a look at how other currencies performed against the rupee during the day today. We're going to take a short break. More business news coming up on the Naisni Business Report. Welcome back. Haley's Solar, the renewable energy arm of Haley's Fentons, has opened doors to 2 new experience centres in Negombo and Kandy respectively, bringing their total to 4 across Sri Lanka. These new centres offer residents a one-stop shop to explore solar energy solutions.
Haley's Solar Experience Centres provide a comprehensive range of world-class solar products, including rooftop PV systems, batteries and inverters. Visitors can also witness live demonstrations of solar-powered water pumps, solar-powered hot water systems, lighting systems and PV systems in action. Haley's Solar Power is committed to providing accessible renewable energy solutions across the country. Hasit Premathilaka, Managing Director of Haley's Fentons Limited, said that they are proud to expand their network and reach even more Sri Lankan families nationwide. Roshan Pereira, the Executive Director and CEO of Haley's Solar, added that their centres located in Mathura, Jaffna, Negombo and Kandy are staffed by quality experts who can help people understand their energy needs.
Commercial Bank of Ceylon plc has announced the appointment of top international investment banker Sharhan Muhsin as chairman and financial services professional Raja Senanayake as the deputy chairman effective Monday 22nd of April 2024. Mr. Muhsin, previously the deputy chairman of the bank, succeeds Professor Ananda Jayawardena as chairman upon latter's retirement. And Mr. Senanayake, a non-executive director, fills the vacancy created by Mr. Muhsin's elevation to the position of chairman of the bank. Mr. Sharhan Muhsin is a senior investment banker with extensive experience in the areas of mergers and acquisitions, corporate finance and capital markets. He has served in senior capacities working with company boards and senior leadership teams of the financial institutions across Asia to help drive their strategic corporate agendas and roadmaps. Travelers arriving at the Makumbara Multimodal Centre can now get a reliable, convenient and affordable Uber ride from a dedicated Uber pickup point. Situated strategically within Sri Lanka's expressway network, the MMC serves as a crucial intersection for travellers between Colombo and southern coastal destinations.
As local passengers and international tourists arrive at the centre, they can just fire up the familiar Uber app and get a comfortable ride without haggling for prices or searching for a ride on the road. The Uber pickup point was launched recently in the presence of Mr. Ranjit Rupasinghe, Secretary Minister of Transport and Highways of the Government of Sri Lanka, and Uber Sri Lanka's Country Manager Kaushalya Gunaratne. Passengers arriving at the MMC can seek booking assistance from the Uber pickup point. Riders will get upfront fares for trips, details of the driver and vehicle, and ETA. Uber drivers will have designated parking spaces at the centre, and that will help reduce wait times and make travel seamless. This initiative was first introduced at the Bandaranaike International Airport, where Uber had launched a dedicated pickup point to help riders and drivers alike.
NDB Wealth Management Limited, the largest private sector asset management company in Sri Lanka, with more than 340 billion rupees assets under management, has embarked on a strategic collaboration with Ventures, a Singapore-based venture capital fund specializing in B2B startups in South and Southeast Asia. This partnership aims to catalyze the growth of both local and global startups through the inception of the Founders Circle initiative by Ventures. The inaugural private network event held recently served as a nexus between high net worth clients of NDB Wealth and the founders of 7 select companies from Ventures startup portfolio, representing Sri Lanka, India, Bangladesh and the UK. Yiva Salon, an innovative self-care brand, proudly announced its official launch, offering meticulously crafted skincare solutions deeply rooted in the rich heritage of Ceylonese traditions. Under the guiding principle of consciously curated Ceylonese self-care guiding principle, Yiva Salon emerges as a beacon of sustainable beauty, championing local produce and traditional ingredients to redefine the skincare landscape.
Founded by Suwani Hitihamu, originally hailing from Kandy, Yiva Salon represents a culmination of her passion for natural healing and dedication to promoting treasures of Sri Lankan indigenous wisdom. Drawing inspiration from the ancient Ayurvedic tradition known as Hela Vedakama, Yiva Salon infuses time-tested remedies into its holistic approach to health and beauty, resonating deeply with discerning consumers seeking pure and authentic skincare solutions. Yiva Salon's commitment to harnessing the power of nature is evident in its meticulously curated range of products, each formulated with a blend of locally sourced herbal ingredients renowned for their historical significance and proven benefits. As consumer demand for pure chemical-free formulations surges, Yiva Salon emerges as a beacon of authenticity, offering safe and effective skincare solutions that prioritize both human health and environmental sustainability.
Global stocks and business report right after this break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. In your international business news, we start with a look at Asian markets now, as the Asian stocks fell and the dollar climbed to more than 5-month highs today. The results were stronger than expected as U.S. retail sales for March further reinforced expectations that the Federal Reserve is unlikely to be in a rush to cut interest rates this year. The MSCI's broadest index of Asia-Pacific shares outside Japan opens a new tab that fell 1.4% to nearly 7-week lows of 521.92, with Japan's Nikkei opening a new tab down 1.6%. U.S. stocks closed sharply lower yesterday as an early lift from a strong retail sales report succumbed to a jump in Treasury yields and concerns about rising geopolitical tensions between Iran and Israel.
The Dow dropped more than 0.6%, the S&P 500 slid 1.2%, and the Nasdaq plunged roughly 1.8%. After a Friday sell-off, stocks opened higher after data showed retail sales increased more than expected in March. But Crew Advisors partner Louise Gowdy-Wilmering says that while the headline number was strong, consumers are cutting back on major purchases due to higher interest rates. Treasury yields jumped, with the benchmark 10-year note hitting its highest level since November.
Ghana's bid to resolve its sovereign debt default has hit a stumbling block after the IMF said a proposed restructuring deal with holders of $13 billion of international bonds does not go far enough in reducing Accra's borrowing to a sustainable level.
The government said in a statement that formal talks were on hold for now after the International Monetary Fund indicated that the deal would not fit its debt sustainability parameters. After the government had released its regulatory statement, the Office of Finance Minister Muhammad Amin Adam said on X that they will regroup to continue negotiations until they reach a deal that is consistent with IMF debt sustainability targets. He said Ghana had reached an interim deal with bondholders but that needed to be tweaked to meet IMF targets. Ghana had been in formal talks with two groups of bondholders since March 16, a group of Western asset managers and hedge funds, and another one including regional African banks.
Data showed that China's economy grew faster than expected in the first quarter, offering some relief to the officials as they try to shore up growth in the face of protracted weaknesses in the property sector and mounting local government debt.
China's economy is doing better than expected. Figures out Tuesday showed growth hitting 5.3% in the first quarter. That was comfortably ahead of analyst forecasts. The world's second-largest economy has struggled to deliver a strong post-COVID recovery. It's been held back by factors including a mounting crisis in its huge property sector. Many major developers are struggling to survive as they grapple with massive debts. China also faces mountainous debts at local government level and weak consumer demand. Officials have turned to spending on infrastructure to help lift growth. The overall picture remains very mixed. Other data released Tuesday showed retail spending growing less than expected. Consumer price inflation also cooled more than expected, adding to signs of subdued demand from shoppers. For now, though, the GDP numbers will spell relief for officials who have set a 5% growth target for the year. They're expected to unveil more monetary and fiscal measures in a bid to hit that figure. Many economists say it looks ambitious, however, with last year's rate of 5.2% flattered by a rebound from lockdowns.
That's the Nightly Business Report for this Tuesday night. Thank you for joining us. I'll see you again tomorrow at the same time. I'm Sina Mayatune. Good night.